लोगों को बताएंगे। और किसी को सवाल है क्या, और कुछ ऐड कर सकते हैं क्या इसके?
Hello and welcome. This is BloombergQuint. We are in conversation with the management of V-Mart Retail, which has reported a 40% growth in its net profit for the quarter ending December. And the operational performance was strong, as well as the margins expanding significantly, of course, to a certain extent, aided by the new accounting standards. But to take us through the quarter gone by and what we can expect going forward, we are in conversation with the CFO of the company, Anand Agarwal. Anand, good morning and thanks for taking the time out. It certainly turned out to be a very, very strong quarter, and especially after a lot of volatility over the previous few months. Can you take us through the factors that you attribute to this quarter's growth?
Hi, good morning. Yes, you're absolutely right. I think it's been a pretty good quarter for us, and we've always maintained that we are a long-term player, and despite the turmoil that we've been seeing in the last couple of quarters, we remain very focused on the long-term trajectory and growth for the company. We still see that the market is full of potential and there is a lot of opportunity still to be untapped, and we're working on the same principles of conservative and disciplined growth in all our areas of operation. So this quarter has been quite exceptional to the extent that we've grown at 20% on top line. Even without the accounting adjustment, at a EBITDA level we have grown at around 30%, and at a PAT level at around 42%. With the accounting adjustments, as you just mentioned, I think the EBITDA growth is looking disproportionately high at around 56%, which is definitely due to the rental line getting out of the P&L and getting included as part of depreciation and interest cost. But otherwise, I think the quarter has been pretty good, and we still remain very focused on ensuring that we are able to continue this run for a long time.
But Anand, there's still a lot of talk in the industry that consumption really hasn't picked up as much. There's still a lot of slackness with respect to sentiment, and yet you guys seem to have certainly outperformed. My real question is, what is your reading on ground, and what does the future say for the next couple of quarters hold for demand for V-Mart?
No, I think at some level there is some level of shrink in the demand. I would not say that shrink or lack of consumption is across all categories. For discretionary items and for slightly higher priced items, there is definitely some amount of footfall drops that we see and lack in consumption. But across the category, I think the general impression that we carry is that there is buying happening. And buying is happening along concentrated lines around festivals, around marriages, around necessity items. So there is some level of dip in the impulse buying. But overall, I think as far as the market is concerned, if people have to buy two pair of clothes, they are still buying two pair of clothes. Probably the third pair or the discretionary or the extra pair is something which is getting postponed. But going forward, I think with the good monsoons and good water levels in the soil and anticipation of a good crop, the winter crop, we see the coming quarters and at least the coming year, we should see some easing of pressure. But I would say that we will still remain cautiously optimistic.
Okay, fair enough, Anand. And if I'm not mistaken, on a net basis, you guys have added 43 stores. That includes 46 new additions, and you've closed 3 stores. My question is that, one, what sort of the total number are you looking at the end of this financial year? And in terms of your store expansion, what are the factors that you decide as to whether or not you want to open a store in a certain area or no?
So I think at an overall level, for the last 10-15 years, we've always been adding around 20% to our retail operating area every year, and this year should not be any different. So far, we've already opened around 50 odd stores, if I take into the account 3 stores that we opened yesterday. As of now, the total store count stands at around 260. I think here on we should be able to add around 5 to 8 more stores by the time Q4 ends, but that is still work in progress. As far as how we decide on what are the locations and which are the areas which we get into, I think at any point of time the business development team is looking at least 100 possible locations, and there's a huge sort of a checklist in terms of identifying which location will work for us in what area. But there are 3 very basic principles that we always keep in mind. First is that we always look around for a cluster based expansion, which means that we will open stores only in the nearby vicinity of an existing town or city. Second is that the expansion or the new store has to be internally funded, so we do not look at debt or borrowings for opening a store. And third is that the location and the confidence in choosing the location has to tick the box on all levels of profitability and the IRR calculations. So we're not really interested in opening stores just for increasing the store count or increasing our top line. Our stores have to start making money, and historically 90% of these stores that we've opened in the last 17 years have broken even in the first couple of months, and that's a tradition and a consistency that we will still want to maintain.
Fair enough. Anand, the final question then. I reckon a lot of stores have come online this year, which is why the same-store sales growth isn't looking up as much. But eventually, of course, a lot of your stores will become 1 year old. And from there on, I suspect we will start seeing that improvement in your same-store sales growth as well. When can we expect that? Can it be in Q4? Can we see in the first couple of quarters in FY21?
I think that's a pretty difficult question to answer given the overall market situation. As I said, we still remain cautiously optimistic, and even for the last quarter, we reported a 1% same-store sales growth. And at a YTD level, we are running at around 2% L2L sales growth. Now that is to keep it or bring it higher depends on a lot of factors, and it's not just the new store openings or the new stores which get added into the like-to-like calculations. But yes, we are still hopeful, and we are still working towards increasing this 2% number to mid-single digit or high single digits, and that's our aspiration for the next year.
All right, fair enough, Anand. We'll leave it at that. Thank you so much for joining us and talking to us here on BloombergQuint.
RP Sanjeev Goenka Group, growing legacies.